Hello, this is Dale. In this video, what I want to do is continue our discussion of the three principal method of trading. This is a strategy that I've developed. It's laser focused. It's a laser focused system to unlock profits from any markets. That's options, stocks, ETFs, Forex. In part two, what we're going to do is continue to learn about the tools. There's three tools that I use. The first one is, you heard in part one, and that is the regression channel. That's a very powerful tool that shows when a stock, ETF, option, Forex is overbought or oversold. And that's a good time to focus on possibly reverting back to the mean. So you might want to be looking for a move in the opposite direction. In this video, we're going to be talking about two more tools, and they are the measured move and the Fibonacci extensions. Both these tools are used to project potential profits. Once again, my name is Dale Brethauer. I've been trading for greater than 35 years. Was a hedge fund manager, been a guest speaker at a number of different platforms, and have written 3 financial books. I currently am getting a big kick out of coaching and mentoring people to learn how to be a success in this very difficult arena. I'm not one of those that teaches because I don't know how to do. I have done and do, and now I have a great passion for teaching. My website, founder of the website, is www.optionsinfinity.com. This is what I believe is the very best option education website available today. But the tools that I teach, you'll see, can be, even though the title's Options Infinity, we kind of focus there, but it can be used really in any market that has a price and a chart associated with it. Okay, so we talked about the entries and exit of the 3 principles, and we talked about the first tool, the regression channel. Now we want to look at how we can manage it and potentially when we want to take profit using measured moves and Fibonacci extensions. And here's a chart that we looked at before with Amazon. And you can see that with the regression channel, you've got the plus or minus 1, plus or minus 2 standard deviation of the regression line. 95% of all prices contained within here. However, there are times that the price does go beyond there. It has excursions beyond. And sometimes I don't want to get in down here and have it fall further and further and further. So what I like to do is I like to wait for a measured move. Okay, what is a measured move? Measured move is when you look at, you can see where the trend is. A measured move, this would be in an uptrend. When it goes from A, the price, let's say the price was dropping, it came down here, made a low, came up, back up to B, pulled back to C, but made a higher low, And then it made a higher high when it goes past the B point. That is a measured move. That's called a measured move when it goes from A to B to C and back up past the B point. That's a measured move to the upside. Now, that is trading with the trend. When we have a measured move, we're looking at an uptrend. Here we're looking at a downtrend. Goes from A to B, B to C, and C is now a lower high. Then if it goes past B, that now becomes a lower low, lower low, lower high. that means that the trend is going down. The classic definition of an uptrend is higher highs and higher lows, and that's what you see here with the bullish measured move. It goes from A to B and back down to C, and C is a higher low. Then when it goes past B, it becomes a higher high. Just the opposite is true for the classic definition of a downtrend. That is lower lows and lower highs. So the bearish measured move goes from A to B, and then B to C, and C is a lower high. And then when it passes through B, it becomes a lower low. That again is the classic definition of a downtrend. This is a very powerful tool that we can use, and a lot of times we'll get into a trade and it continues to trend either up or down, and it continues to make measured moves, and those are secondary entry points. Now, the other nice thing about the measured move is once we have a measured move, we can begin to look at the Fibonacci's. But here's that Amazon chart with our regression channel. And now what I've done is I've put in measured moves. And let's see how we can use this. The price of Amazon was between the +1 and +2. However, it made a measured move to the downside right here. It's a good time to get in. It's a good time to get in on the bear call. Okay, you want a bearish move right there, and down it came. Okay, this is kind of an alert point. It came down to the -2, which was really overextended to the downside. However, you might want to wait till you get a measured move right here to the upside to confirm that. Okay, and then here is a measured move to the downside. This was an untradeable move because there was no measured move. Then it had a measured move to the downside, measured move to the upside, untradeable, measured move to the upside, all the way up to the +2, and then a measured move to the downside. This, in conjunction with the regression channel, really gives you you can trade on the most conservative, most consistent part of the trend. Now, principle number 3 is using the Fibonacci extensions, and I use that to determine when the trade is overextended, and I can preset when I want to take profits. And I can do this as soon as we enter a market. You can preset when you want to take a profit. When we want to take a loss is when the measured move goes against our trade. So before we put a trade on, we know when we're going to exit. We want to cut our losses short, or we want to let our profits run. Now, the Fibonacci's were derived from a number sequence where you add the current number to the previous number to get the next number in the sequence. 1 + 1 is 1. 1 + 1 is 2. 1 + 2 is 3. 3 + 2 is 5, and so forth, all the way out. That is the Fibonacci sequence. Then along came mathematicians, and they started looking at dividing one of these numbers by the one right before it, and they got 0.61, and that became known as the golden ratio. 0.618 is the golden ratio. And when you square it, it's 0.382. When you take the square root of that, it's 0.786. Then, when you take the reciprocals, it becomes 1.27, 1.61, 2.61, and that's what we use for Fibonacci extensions. Now, Fibonacci's can be seen everywhere. As you go up the stems of a flower, the leaves grow at a proportional distance to the ratio. The spirals on seashells are in proportion to the golden ratio. Your bones in the body grow proportional to the golden ratio. My hand is 7.5 inches. My forearm is 12.3 inches. When I divide 7.5 by 12.3, you got it. It's the golden ratio, 0.61. So are the relationship of all the major bones in your body. So if Fibonacci is seen, the number sequence and the ratio is seen throughout nature, well, what fuels the stock market? Fear and greed. Fear and greed are human emotions. If things are fueled by fear and greed, then the Fibonacci's ought to be able to measure when something is overextended. It almost becomes a self-fulfilling prophecy. Now let's just take a look at how we can use this with the measured move. Before we go from A to B and B back to C, and then we make a measured move here when it gets higher than B, and this is for up. And then you can actually Thinkorswim. It's just click and drag, and it's automatically puts in the 1.27, the 1.61, and the 2.61. I'm not affiliated with Thinkorswim. I happen to think it's one of the best trading platforms out there and charting services. And having them automatically put that on a chart for you is just a lot of good information. Now, most times it'll come to the 127. And what's going to happen at the 127, it's either going to consolidate, it's going to pull back, or it's going to blow right through. If it blows right through, it's probably going to go to the 161. At the 161, the same thing's true. It's either going to consolidate, pull back, or blow right through and go to the 261. These happen most often. The 261 happens infrequent. So this is really, these are the two, the 127 and the 161 are the ones that I really focus on. So let's just come over again to our Amazon and take the measured moves. And I placed some Fibonacci's on these measured moves. And there you go. There's the 261 of this measured move. So this is way overextended. It's down to the -2. You could probably take a trade down there and feel confident. But if you want to wait till the measured move, here it is. Here it is right here. Comes up, pulls back with a higher low, then a higher high, goes to the 127, consolidates, pulls back, makes a measured move, goes back down to the 161 and the -2 on the regression channel. Even though this did not make a measured move, you could take that and then get out when it makes a measured move going against you. This one came down to the 127. Here's the 161. Here's the 161. Here's the 127. The more you practice and the more you put measured moves on your charts, and the more you look at Fibonacci extensions, the more amazed you're going to be that these two tools and the power of these two tools, and sometimes it's amazing, it comes up within a tick of where the Fibonacci extension has projected. It will stop on a dime and turn around. It's uncanny. These Fibonacci extensions are universal. You can use them in all time frames, in all markets, any price action going up or down. So here's just the chart number 2 is we looked at Amazon. Well, how about Forex? All right, Forex. And what I'm looking at here is the US dollar, Japanese yen. You can see it kind of was consolidating here, kind of channeling, broke out of the channel, made a measured move, came down to the 127, pulled back, but then made another measured move right here, went to the 161, pulled back, came all the way down and went back up again, but finally hit the 261 down here. You can take profits here. You can take profits here, or if it looks good. I mean, I would have probably stayed in there and waited till it came down around here to take profits. This is another measured move that it made here, and that took it down to the 127. The more measured moves you have, the more information you're going to get. And when they start clustering, when the numbers start clustering, and it might be that the first measure move is at the 261, the second one might be at the 127, and the third one might be at the 161, but those numbers all start clustering together. You put those together with the regression channel, either the +1, -1, or +2, -2. You've got a dynamite strategy of kind of looking forward in the market rather than looking back at past history. In conclusion, the Fibonacci extensions allow me to preset the price target for my exit. So looking at our entry and exit walkthrough, our entry is really when the price moves to ±1 or ±2 on the regression channel. Most times I'm going to wait for the price to make a measured move, and that's an entry. Now, sometimes if it stays in the trend and has a pullback followed by another measured move, that's a secondary entry, and that happens more than the first one up here. Now, the exit is when I get a measured move opposite the trade. It's just exit the trade. The other one I want to let my profits run, and I'm looking at the Fibonacci, especially the 127 and the 161, to preset and get ready to book my profits. I hope you enjoyed this video. If you did, I hope you continue on and view all 12 parts of this series. I'd also like you to go over and visit our website, www.optionsinfinity.com. When you get here, you can just scroll down, and this portion right here is a PDF version of a lot of things you're going to learn in this video series. And all you have to do is just click this button to either view it or download it. And after you've read this, after you've viewed all this, after you've heard me, what I'd like you to do is become a member of our community. And what you can do is you're basically going to be looking over my shoulder as I trade, because when I see a trade, I send out a text or email alert to all my members. In addition to that, we meet once a week on Tuesday afternoon at noon Eastern Time. This meetup is always recorded and posted on the website for all members to view. We talk about the trades we're in. I usually have a little lesson, and there's plenty of time for Q&A at the end. I also put out a blog, which, by the way, it's a video blog. It was voted in the top 10 by FeedSpot. And what I do there is basically go over the trades and what I see in the future. And I put those out on Thursday and Sunday night. So and the other thing is, you will get my personal email. So you've got direct contact with me. I'm the person that trades. I'm the person that teaches. And like I said, you've got me. I answer emails on a timely basis, and the ones that look really good, I'll bring those into the room and share them with others. Again, I hope you enjoyed this video. Look forward to seeing you in part 3. Bye-bye now.